Hello family, thank you for tuning into this video. Hey look, this video comes via popular demand. So I've had a number of people reach out to me and say, hey Troy, can you do one of these types of videos on Bundaberg? So here it is today, guys. I'm going to break down the 5 hottest suburbs in Bundaberg right now. So if you're an investor and you're looking to buy an investment property in Bundaberg in particular, or just somewhere in regional Queensland, I think you're going to get some tremendous value out of what's going to be covered in this video today. I'm super keen to bring this to you guys, and thank you again for tuning in. Let's go. All right, so for those that don't know me, my name is Troy Bassini. I am the owner and head of research of Capricorn Life Buyers Agency. So Capricorn Life Buyers Agency is one of our subsidiary brands under the Life group of companies. We've got Capricorn Life, which is Central Queensland focused. So we have a team of buyers agents across the Central Queensland region, specialising in Bundaberg, Gladstone, Mackay, and Rockhampton. So look, guys, this is just a quick plug for the business. If you feel as though you fall into any of these categories, so this is the type of people we generally work a lot with and help is struggling home buyers, struggling investors, investors that are looking to outperform the market. So that's one of our missions in house is we can get you a better result than the standard DIY results. We work a lot with interstate and geographically challenged buyers also, and we do a large volume of our transaction off market. So 70% of our business is done off market. So we tend to get you ahead of the curve as well. So if you are someone that falls into any of these categories and feel as though you need a hand, feel free to reach out to me and the team. You can give us a call on that number, visit that website, and book in a time, and we can go from there. Cheers, guys. All right, now let's dive into the juicy stuff, the thing that you've all been waiting for. So we're going to go through 5 suburbs today, guys, and we've got the first suburb here, which is East Bundaberg, the first cab off the rank, and that has a median house price of $494,000. So for those that don't know where East Bundaberg is, sits just on the flank of the CBD on the Bundaberg sort of east side, not directly on the east coast, because that's where you have a lot of the east coast suburbs in Bargara, Innes Park, Coral Cove, Burnett Heads. This one is a lot more closer to the CBD. So East Bundaberg sits on the CBD's flank, and you're probably into the CBD in the best part of 5 to 7 minutes, and you're to the beach in roughly, I would say, 15 minutes or so. So the suburb itself is quite a well-sized suburb. It has 1,700 unique dwellings. It has 60% of the people that live there being owner occupiers, which is okay. Generally, I like to see above 65%, but again, 60% is quite strong. Rents per week there on average right now, or the median is $510 per week, so the rents are relatively strong. The vacancy rate is super tight, 0.1% there. So supply in terms of rental stock is very low. And then the listing velocity of stock right now is very low as well, with the current stock on market sitting at 0.3% in East Bundaberg. Now, so what's made East Bundaberg one of the hottest suburbs is its median house price growth. So over the last 12 months, it's grown at a phenomenal rate. In fact, it's grown by a total of 31.7% in the last 12 months. So it's increased from $336,000 or a total of $158,000. So that median has just had a rocket shoved up it and really has increased dramatically over the last 12 months here, guys. So look, it would have been nice if you invested in this suburb the best part of 12 or 24 months ago. You would have really done well right now. And look, I don't know what's going to happen going forward, but I think what's really caused this median house price to skyrocket a lot is where East Bundaberg is. It's surrounded by some really expensive suburbs in Ashfield and Kalki, and it's kind of neighbours those suburbs. So I think a lot of people that were priced out of those areas have migrated over to this suburb because it kind of offers the same lifestyle drives. You're close to generally all the same amenity as well, and it has some pretty good pockets, East Bundaberg as well. So I can certainly see that being the reason why that median house price has surged up over the last 12 months. But 31%, that is insane amount of growth here, guys, for a suburb in Bundaberg or a suburb in regional Queensland for that matter to rise this much in the best part of a 12-month period. So its median house price has done very well, making it one of the hottest suburbs. Its days on market figures are sitting at a healthy level as well. So on average, it's taking 44 days for a property to sell in the suburb of East Bundaberg right now. And it's actually averaged around 40 days for the last 4 months, which suggests that demand in the suburb isn't exactly a frenzy. It's relatively healthy where it's sitting around that sort of 44 days. Generally, when you see a market idling around that 30 days or less for a long period of time, that's when you know things are transacting there very, very fast. And often the market there is a frenzy where things are going under contract within the first sort of 1 to 4 days of going on the market. But here, based on a 44 day on market average, I would say most things are going under contract in this market, I would say, within the first sort of 7 to 10 days in total. Because in Queensland, it takes on average for a standard settlement to occur roughly 30 days after you put a property under contract to when you settle. It's 30 days in Queensland as opposed to Victoria and New South Wales. I know that time frame can be extrapolated out a little bit longer, around that sort of 60 to 90 days in some cases. So days on market figure from a demand side driver side of the market shows that this as a driver is also very healthy in the suburb. I find that the East Bundaberg has some flood affected areas as well, some of the low lying areas that sort of neighbour where the Burnett River is. So East Bundaberg backs onto where the Burnett River is. I find that some of the low lying areas around there have a tendency to flood. So those properties tend to take a little bit longer to sell as well, and they have a tendency to drag up that average days on market figure as well. So that's also just something I think you should be careful of if you are looking to invest in a suburb like East Bundaberg, is stay away from the lower lying parts of East Bundaberg, generally on the, what would that be classed as, the northeast side of Bundaberg, where it sort of flanks the Burnett River. Looking at some other demand side metrics here in not days on market, sorry, vendor discounting. Vendor discounting sits at 1.5% and has been trending downwards for the last 12 months. So that just goes to show that most properties that are selling there on the market or selling in the area are pretty much only discounting the best part of sort of 1 to 1.5%. So that means on a $500,000 purchase, you could potentially pick it up for $495,000, so $5,000 off there. Rounding out to roughly 1%. So just be careful of that also though. Treat everything on a case-by-case basis if you are buying in this suburb, as things will definitely sell under list price, at list price, or well and truly above. So everything's on a per property basis, and just do your individual due diligence on each opportunity as they pass by. But from a demand side of the market, that's generally quite a healthy market as well when you see those vendor discounting rates very low, because when they're often very high, that means that things are going to the market, and something that goes on the market for $500,000 and it sells for $470,000, and that happens at large volumes. That's when you start to know that that market's potentially starting to slow down and go backwards, and that median house price will start to slow down, retract, or stagnate. Whereas on the flip side, if things are selling over and above list price, well, every time different properties come on the market, that's when you know that median house price can continue to rise also. This suburb also has some good data pertaining to their online search interest rates. So basically, realestate.com and Domain collate a bunch of data. So for every property that goes online, it basically collates all the unique clicks each listing gets, and obviously they aggregate that data and then form a suburb level click rate. And here we can see that the average property that goes on the market in East Bundaberg, it's getting roughly around 486 unique clicks per property. And relative to some of the other suburbs in Bundaberg, I think that's quite a low click rate. But in saying that, that click to sort of household ratio, click rate to household ratio, I still believe sits in a very healthy portion right now. But it just goes to show that there is some really good market depth here. And here, particularly with that low sort of household volume in 1700 and existing low stock, if that sort of high levels of engagement or interest on realestate.com and Domain remains high, then obviously that still creates an imbalance between supply and demand here. And we could continue to see this market rising in the short, medium, and long term going forward as well. And the last thing the suburb has is a really healthy absorption rate, which sits at 102%. And this is very strong. So you can see here that there's been a total of 17 listings and 18 sales in the last 6 months, so resulting in that 102 absorption rate there. So everything that's gone to the market here has sold, guys. And you look at that frequency of properties over the last 6 months, not a whole bunch of opportunities there as well. So as you can see, if you are a buyer, maybe looking at putting East Bundaberg on your shortlist and maybe buying an investment in this area, just be mindful that there's not a whole bunch of opportunities that occur here. So when opportunities do arise here and it's ticking majority of those boxes, then you probably have to act fast, as the next one or the next available opportunity might be weeks or months away. As you can see, that listing velocity is quite low there. But yeah, guys, overall, East Bundaberg, look, a 31% median house price growth rate in the last 12 months. That is insane growth, now sitting at $494,000. In the grand scheme of things, like, it's still about $100,000 to $150,000 cheaper than its neighbouring suburb in Ashfield and Kalki. So I still think in the short term it has a lot of wiggle room to push up maybe to around that 550. But then I start to really feel that this market starts to sort of hit a ceiling around there for quite some time, and we really need to see Kalki and Ashfield continue to push up even further for this one to still be relatively affordable to those areas. And I think that's what's been really driving the median house price growth in this suburb. Now, just quickly, if I was buying in Bundaberg right now, I'd be targeting opportunities like this one, 4 Hoffer Court, East Bundaberg. It's a 4 bedroom, 2 bathroom, 1 car on 627 square meters of land. So if you look at the suburb here and the makeup of the suburb, it has what I'd call 3 different pockets. So it has a high-end pocket that ranges between sort of $600,000 to $800,000 for properties on the upper end of this suburb. For the bulk of the stock, sort of transacting between sort of 450 to 600K, and then the low end of the market, sort of 300 to 450. I think the best opportunities sit within the middle of the market here right now, between that 450 to 600K buying, because what you actually find is a lot of the properties over in Kalki and in Ashfield sell on average between 6 to 800 more frequently. So I think there's a lot of good value for like stock like this 422 that you can pick up between sort of 450 to $600,000. Whereas you pick that one up and put it in Kalki or Ashfield, you'll be paying close to $600,000 or more. So I see more value at the lower or the middle end of the market here between 450 to 600, and I find the lower end of the market here between sort of 300 to 450 tends to be like the older cottages or Queenslanders, and I find they might need a bit of work, and also they tend to be the properties that are in the more flood affected areas as well. So if you are buying in the suburb, I'd be looking at properties like this one, guys. Low set brick homes between $400,000 to $600,000. Okay, suburb number 2 is a suburb called Thebeban. So for those that don't know where Thebeban is, just look on the map in Bundy, but it sits pretty much, uh, say, southwest of Bundaberg, and you're probably the best part of 10 to 15 kilometers from the CBD also. And it has a median house price currently of $482,000. Looking at some of the suburb data here or profile, it has 1,300 unique households, so it's kind of a smaller suburb in relative to those other suburbs in Bundaberg. Owner occupied percentage of 67%, which is quite good. A median rent of $500 per week currently. A vacancy rate of 0.4%, so a very tight rental market here. And stock levels sitting well below 1% at 0.2% there also. So very low levels of supply here. So it's a small suburb, has high owner occupiers, rents coming in are quite strong, vacancy rates are low, stock levels are low. So it's ticking a lot of boxes for me as a place to invest. For just those who want a bit of history and background on Thebeban, so it did have a lot of local stigma, probably going back 5, 7 years, 10 years ago, as being the lower socioeconomic area of Bundaberg. A lot of the people lived out in Thebeban, and they were paying sort of cheap rent, weren't looking after properties. It was quite a rough little area. But over time, we've seen as Bundaberg has gotten more expensive, as rents have put upward pressure on the market and the rents have increased, we've seen a lot of the lower socioeconomic demographic move out from places like Thebeban and actually go to more cheaper sub-regional hubs in Gladstone and in places like Childers and Billawheeler as well. So Thebeban has more or less become your sort of average uh, middle class suburb, I would say, whereas predominantly was your more lower socioeconomic area. But we can see here over the last 12 months, the Bevan has done some really, really good things. It's grown by 25.6% in the last 12 months from $359,000. So a total of $123,000. So it's done some massive growth here, guys. This little suburb, which is a really good thing actually, because I was actually quite bullish on this suburb going back 12 months ago. I actually bought a number of investments in this suburb because what I actually found was it presented as really, really good value because you could buy 422 dwellings on 600 square meter blocks that have been built in the sort of the last 15 to 20 years for high threes, low fours, mid fours then. Now it's very difficult to find those 422s or properties of that configuration at that price point anymore due to this sort of rapid rise what we've seen now. So I've been very bullish on this suburb, and as I said, I've bought a number of investments there in the last 12 months and actually had a crack at one there this week off the market. We put an offer for it for 485. The agent came back and said they wanted 500 for it, and we decided to bow out of the race there. So if you want an off-market property at the Beban, I think that one's still available. Let me know. I might be able to connect you with that one for $500,000, renting for 580 per week, so roughly around that sort of 6% into your brick home, 4 bedroom, 1 bathroom. I think just over a 650 square meter block from memory. So yeah, guys, look, it's a suburb that's going back to it has done some really, really good things. And as I said, I think the main reason why this suburb has increased, I think a few investors have catched on to the good yields in there and then the sort of cheap brick homes. But I think a lot of first home buyers came into this market as well, particularly the ones that have been after the sort of brick home close to the CBD as well. Um, the ones that don't require any work, those sort of properties. And I think this suburb really appealed to a lot of those people. So we've seen a lot of them come in and buy these properties at sort of high threes, low fours, mid fours, and have really pushed that median house price up over the last 12 months here in Tabibin. And just demonstrating how high the suburb is in terms of demand right now, or how hot it is, you can see here that has an average day on market currently of 14 days. 14 days. So things are going under contract within minutes, within hours of coming to the market. And what you'll actually find here, given that days on market is a lot lower than 30 days, there's been many cases now in the marketplace where people are offering cash-based offers or unconditional contracts where they're settling a lot faster than 30 days, so really dragging down that average here. And I think that really comes back to the lack of stocks. As you can see, there's 0.2%. And if you look at the listing velocity, there hasn't been much listings and much sales in the last 6 months. You can see there's been a total of 20 listings and a total of 20 sales in the last 6 months, which has resulted in that absorption rate there of 100%. So I think that's really playing into the fact, the low supply is really playing into the fact why that day on market is so low, why that absorption rate is so high, and what's been really driving that median house price is that imbalance between supply and demand also. And if you actually look at their unique views per listing on realestate.com, it's quite high too relative to the size of the suburb at 324 unique buyers per listing. And when you've got sort of that much market depth, and there's only the best part of sort of 20 properties over the last 6 months that have come online, and what is that 20 divided by 6? What does that work out to be? 3 or 4 properties a month coming online, which isn't a great deal of opportunities as well. And what you'll find is that the Beban has properties that range from as low as sort of 350 up to 800,000. So if you're looking to buy an investment, there's not many opportunities that might come up in that sweet spot between sort of that sort of 450 to 550, as well as different opportunities sort of pop up at different price points. But yeah, guys, one of the suburbs I think that has done really well. I think it's also going forward got some potential to get to 550, maybe even 600 over the next sort of 1 to 3 years. I think it's definitely possible, particularly with the new hospital going in there. I think this suburb will be a great beneficiary of the new hospital. I think a lot of the medical staff or people that are sort of associated with the new hospital will be looking at suburbs like the Beban to be based. So I think the median rents can continue to push up, that's for sure. And I think that median house price can definitely catch up to Avoca very soon as well and push up around that sort of 550 as well. Now, just looking at the Beban, if I was buying an investment property there, I'd be targeting something like this, these low set brick homes. You can get these 422s currently on 600 square meters built in sort of the last 20 years in moderately good condition as well. And if you can target the ones that are sort of your non-spec homes, I think you'll get a really good rental return. And I think those ones will outperform in the marketplace. But if you look across the suburb, it has sort of a high-end pocket between sort of 650 to 850. But what you find is they tend to be the more rural residential properties. The more larger ones on sort of an acre or two tends to be the higher price point. But then you have sort of majority of the stock transacting now sort of between 500 to 650. And then you have sort of a lower end of the market we'll probably sell between sort of 400 to 500. It's probably very difficult to get brick homes like this under 500,000 anymore. You're probably looking at sort of low to mid fives right now. But if I was buying this suburb, and which I am right now, I'm targeting suburbs of properties like this one. All right, the next suburb is a suburb called Bargara, which has a median house price of $795,000. So Bargara has actually been one of the most popular suburbs in regional Queensland during that COVID-19 period. A lot of people migrated from the Sunshine Coast, Brisbane, Sydney, Melbourne, and flocked to this particular area. So it's done some really good things over the last couple of years, and in the last 12 months, it appears to be still surging along also. But it's a beachside suburb on the Bundaberg east coast. And as you can see here from the data, it's actually one of the more larger suburbs, probably the largest suburb in Bundaberg itself, with 5,400 dwellings. It has an owner occupier percentage of 74%, which is very, very good. I really love suburbs that have an owner occupier percentage above 65%. Median rent's close to $600 per week here, guys. So very strong rents in this suburb. Vacancy rate sitting at sort of 1.9%, so close to 2% there. I'd probably like to see it a little bit lower, but nonetheless, that's still a really big suburb as well. So there'll be a lot of turnover of rental properties there as well. And as you can see, stock levels in terms of velocity of listings or supply in the marketplace right now, 0.6%. So even though it's a big suburb of over 5,000 dwellings, it still has a stock rate under 1%, which is very, very good, right? So yeah, as I said, during COVID, one of the hottest suburbs in regional Queensland, and so it should be. It's one of the most beautiful places on the regional Queensland east coast as well. So you can see here in the last 12 months, it's continued to surge along. So in the last 12 months, it's grown by 25.4%. So it's increased now up to $795,000, but it basically rose from $593,000, or a total of 200 grand in the last 12 months, which is insane, right? Many people actually thought that this suburb peaked, particularly investors, and a lot of the agents sort of in the area at the time were speculating that a lot of things were overpriced in this suburb. But look, I say this suburb has grown 200,000 in the last 12 months. Is actually more. It's grown more than it has in the last sort of 3 years in total. So it's really outperformed in the last 12 months, and it's done a bulk of its growth in the last 12 months. And it's probably a good thing if you invested 12 months ago, but it's probably hard to get into this market now and make money, but I'm going to run through some really good points as to why. I still think there's some opportunity here if you're looking to invest still in somewhere like Bargara. But I was investing in Bargara when you could get a 4-bedroom, 2-bathroom brick home for like high 400s, and now most of the properties that I bought in the high 400s, 5, 6, 7 years ago for clients, they're worth like close to $700,000-800,000 now. So we've had a lot of clients that have virtually doubled their money in this marketplace. But with the median house price sitting at $795,000, people and looking at this sort of median house price growth over the last 12 months, there might be many people that might strike a pen through Bargara thinking that it's probably not worthwhile investing here. But I still think there's a lot of good things going for this particular suburb, mainly because, like, looking at it, I still think there's still a lot of affordable stock within the suburb, and I still think what this suburb has to offer, a lot of very similar lifestyle drivers to the Sunshine Coast and the Gold Coast, but you can get it for basically half the price now. So I still see a lot of this area or this part of Bundaberg being very affordable for people looking for lifestyle property, and that are priced out of the Sunshine Coast and the Gold Coast, or just want better bang for buck and be in a more quiet location, but still enjoy that seaside amenity. Bargara still offers plenty of value for money there. So I think it has the potential to get to a $1 million median house price, I think, over the next 5 years. I certainly believe that's definitely possible in this suburb, guys. And look, just moving through some of these other data here, we can see that currently averaging on 50 days on markets currently, it has maintained that trend for the last 6 months. So it's not a complete frenzy as what it was in COVID, where it sort of averaged around that sort of 35 days and under. It's sitting around 50 days now. So most things are sitting on the market for about 2 weeks before they go under contract. So you have a good buy window there to potentially get something under contract within a 2 week period. So it's not a complete frenzy. You don't have to really worry too much. But in saying that, I know a few properties we've had a crack at recently that went under contract very fast, and these tend to be the more sort of ones in the affordable price bracket. The sub $650,000 properties I find are moving very fast. The ones sort of above $650,000 up to $1 million are taking a week or 2 through 3 weeks to sell. So they tend to move a little bit slower. So yeah, just be careful if you are navigating the suburbs. Be mindful that each property might be different. The absorption rate sits at 195%, which shows that demand is strong. And look, the listing volume, despite it being a large suburb, you can see here 47 listings, 92 sales in the last 6 months. So there's been a massive sort of imbalance between sort of, how many properties have been bought versus how many properties have been listed in the last 6 month period. And for those that don't know, they might look at this and say, oh, this is a mathematical anomaly, Troy. What's going on here? How can there be 47 listings and 92 sales? So basically, prior to 6 months ago, stock would have accumulated over time, and not every property sells within the first month. So the listings come on each month, but the ones that don't sell that month, they roll over to the next month. They create a rolling inventory pool. So obviously, when their listing velocity isn't enough to keep up with demand, people then tap into that rolling inventory pool. So if there's 10 properties listed a month, but there's 20 properties available for purchase, they'll start dipping into that sort of, inventory pool there. So that's how you sort of move into a higher absorption rate where sales exceeds listing volume. So that's the best way I can explain it there, guys. And look, this just goes to show the demand levels for a suburb like this: 1,700 unique buyers per listing on realestate.com. So very, very strong demand here. And I can imagine there'll be at least 30 or 40% as well of that coming from interstate and intra-regional buyers. As I said, they're really moving into this area to capitalize on this sort of lifestyle amenity that it offers: the beach, quiet, coastline, good affordability, etc. So yeah, you can see it's ticking a lot of boxes here, and I think it can definitely get to the $1 million median over the next few years. So if you can get into this market, obviously it's a bit more expensive than some of the other suburbs in Bundaberg, but I think it offers a lot of upside potential in the future, that's for sure. So if you can get into this market, I think there's a lot of good upside here to be made. And look, if I was buying in this market, I'd be targeting opportunities like this one here: 9 Cascade Parade, Bugara. It's under offer now, but I'd be targeting properties very similar to this one, where you can get them between sort of that mid fives to mid sixes. So between 550 to 650, you can pick up these sort of 3 bedroom, 1 bathroom brick homes on circa 600 square meters of land. Because yeah, I think that's where the good value in the suburb is. But if you actually look at the suburb makeup, it has a very high-end sort of market as well, where a lot of stock there, particularly the ones that are overlooking the water, that are larger in configuration, these big luxury sort of beach homes that are selling between sort of $1 million to $3 million. Then you have sort of this middle part of the market now, I think, where most of the stock is transacting between sort of 700 to $1 million bucks. And then you have this lower end of the market where properties like this one on Cascade Parade are selling between sort of 500 to 700,000. I think if you can buy in that lower end of the market, I think you'll still get some really good upside there going forward. And targeting these more cheaper brick homes, I think they've got a lot of wiggle room to push up as well, particularly as the upper end of the market starts to continue to rise. Obviously, that's going to drag up these lower end of the lower end of the market as well. And if you can get like a 3 bedroom, 1 bathroom property like this one on the same street where houses are selling for $800,000-900,000 up to $1 million bucks, then you're probably buying in a really, really good pocket there, and can really piggyback off a lot of that growth that's going to occur on that street and in that immediate pocket there as well. All right, now suburb number 4 is the suburb called Millbank. And Millbank, for those that don't know, is located in the north of Bundy. You're looking at sort of 5 to 7 minutes to the CBD and 15 to 20 minutes to the beaches or the coastline like Bugara. And as you can see here, it's probably your average size suburb in Bundaberg, 1,200 unique dwellings. Owner-occupied percentages sitting at 63%, so very close to that sweet spot of 65% that I like. Rents are relatively strong as well, sitting at $495 per week. The median, the vacancy rates, extremely low levels of supply here in this suburb, sitting well below 1% at 0.4%. And stock levels also very tight, sitting at 0.2% as well. So look, guys, it's done some really good things over the last 12 months, much like these other ones we've discussed today, increasing double digits, sitting at 25.1% in the last 12 months. So it's increased from $351,000, now sitting at $469,000. So that works out to be roughly $118,000 in growth over the last 12 months, which is extremely high, right? And very good relative to what if you invested here, you probably would have bought what the average property sitting at, let's say, $550,000, $60,000, $80,000 all in to purchase a property like that, particularly if you're looking at an investment property with an 80% LVR. And you probably would have got over 100% return on equity if you invested 12 months ago. Not return on equity, return on capital if you invested in the suburb 12 months ago, which is crazy, right? Insane, this level of growth. Millbank, very interesting. This one, like, it's one of the suburbs that sits along the Bundaberg East Coast, not Bundaberg East Coast, Bundaberg Burnett River, that doesn't necessarily flood. So even though it's so close to the Burnett River, Burnett River kind of straightens up along there, so it doesn't really spill over and flood into this suburb as sort of many of the sort of other areas where the river starts to snake and bend, and that's where the river obviously bursts its bank and then starts to spill over into the rest of the township. Whereas Millbank, it's kind of been a suburb that's been well buffered from the flood. So I think it has a lot of things going for it, hence why this median house price has grown the way it has over the last 12 months. I think number one, it was very affordable relative to what you could get elsewhere. So you go just slightly north of Millbank and Branyan, and slightly west of Millbank, you got Avoca, and those two suburbs are the best part of $100,000 to $150,000 more expensive for similar type dwelling. So I think a lot of people flock to places like Millbank that couldn't get into Avoca, couldn't get into places like Branyan. Hence why that median house price, I think, has grown the way it has. So it's really been a beneficiary of the sort of price ripple effect in that immediate area. And I think the investors also sort of flocked in there as well, really capitalizing on that price point and those high rental yields as well, because given that sort of rents were so tight there, or the rental market so tight, properties are getting really good rental premiums there as well. I think those two factors really attributed towards this sort of median house price, I think, surging along as well. And it's also close to some good schools, close to the CBD, has some pretty good stock there as well. And again, it doesn't flood. So for me, it was ticking a lot of boxes, and for a lot of buyers, ticking a lot of boxes, and hence why that median house price, I think, has done what it has in the last 12 months. Going forward, I think this suburb is very dependent on what Branyan and what Avoca does. So I think if Avoca continues to push up and Branyan continues to push up, and this suburb remains affordable relative to those two suburbs, I see that also moving along nicely as well. So I think there's a lot of steam still in this market, providing Branyan still rises and providing Avoca still rises, guys. So looking at this other data here, so days on market sitting at 36 days and currently has maintained that trend for the last 6 months. So things are going under contract here very fast, guys. Within the first couple of days of going to market, things are being tied up by buyers. So just be mindful of that if you are looking to buy an investment in this property. You've got to act pretty fast and be pretty swift with your process and offers. So yep, demand looks very strong here, guys. Absorption rate sitting at 100 as well, which shows that demand is also very high, and it's probably what's continued to put upward pressure on that median house price over the last 12 months. So we've had in the last 6 months alone 19 listings and 19 sales. So not a large transaction volume there. So very low levels of supply over the last 6 months. What are we looking at there? Sort of 3 to 4 properties per month. So there's not a whole lot of transaction volume there. So in saying that as well, if you are looking to buy in this suburb, those opportunities that come up, they're very infrequent. So just be mindful of that and maybe take your best foot forward when there's an opportunity that comes up that's ticking majority of your box, because you don't know when the next one is likely to come up. But that absorption rate very high. So everything that's going to market is getting chewed up and swallowed. And look, the buyer demand, as per realestate.com/domain, we can see here that 449 unique buyers per listing. And again, that click to household ratio is very, very high there as well, sort of sitting around that 40%, which is what you want to see when you're looking at this ratio for suburbs to invest in. So look, guys, it's got a lot of good demand side data, looking very good. All the suburb profile information is ticking a lot of boxes there. And as I said, I think the suburb has a lot of scope to push up, I think, over the next couple of years, but it's largely dependent on if Avoca and Branyan continues to rise. So if you are looking to invest in the suburb, I'd be keeping an eye on Branyan, the data on Branyan, keeping an eye on the data on Avoca and seeing what they're doing, particularly with their stock levels, particularly with their days on market, their vendor discounting, all the demand and supply side data to see if that's tight. Because as those markets continue to rise, I think Millbank will follow closely as well, or relative to how those markets are doing as well. But it certainly outperformed um, both of those two suburbs in the last 12 months, that's for sure. All right, so Millbank, look, it's quite a small suburb, but it does have a variety of different little pockets. So it has an upper end of the market that sort of ranges between sort of $600 to $800,000, and these tend to be the properties that sort of overlook the Burnett River, and they tend to be quite large in nature as well, 5, 6 bedroom properties on bigger blocks as well, like up to 1 or 2 acres. So they tend to be the more expensive properties in this suburb. You've got the middle end of the market, which most things are transacting between sort of 450 to 600,000 as well. Then you have the lower end of the market between sort of 300 to 450. If I were buying in this market, I think there's a lot of value in the lower end of the market between sort of 300 to 450. And I think if you can get your hands on something like this here, 15 Warnell Street, Millbank, it's a 3 bedroom, 1 bathroom, 1 car on, almost a quarter-acre block here, guys, 916 square meters. And this is like a cottage with a brick base almost. So I'd be looking at stuff like this. I think there's still plenty of these good opportunities where you can get these sort of, older Queenslanders or cottages, providing they're in good condition and on a decent land parcel. I think they're the ones that I think offer the best value and best upside in the marketplace, because you can still get these ones, and the ones that are in good condition, they'll rent for close to $500 per week, the ones that are in good condition. So you have a really high yield for a low entry price, and I think this is where the best value is in the suburb. But obviously, if you do have a higher budget, I'd be also considering these other opportunities as well, because you can still get brick 422s that are sort of between sort of 5 and 600 as well, that are quite nice, and obviously the upper end of the market as well, if you can get into there. Obviously have some really nice properties on larger blocks and ones that overlook the river as well. But the lower end of the market, guys, I think that's where the best value is. All right, guys, thank you for sticking around. This is the last suburb now I'm going to cover, which is a suburb called Branyan. So Branyan sits on basically the northwest front of Bundaberg, and you take roughly 7 to 10 minutes to get into the CBD from there, and roughly 20 minutes to the Bundaberg coastline. And yeah, quite a nice established area on the Bundaberg north side here. As you can see, it's a lot bigger than some of the other suburbs we've discussed today by the best part of 800 unique dwellings more than Millbank, bigger than Thebeban, bigger than East Bundaberg. Not as big as obviously Bargara, which is sort of double that size, but it is one of the biggest suburbs in Bundaberg. And as you can see here, 82% with the own occupier percentage, which just goes to show there's not a whole lot of investor owned property out there. 82 is very, very good. So a very stable market here, and a market that's predominantly driven by owner occupiers. And I like to say anything above 65 is healthy, but when you start to move up into 80, 90%, you're in a really, really good market there, which shows that a lot of demand is from owner occupiers, and it creates that really good market stability. Rents very premium, very high, as you can see, $580 per week. Vacancy rate sitting at 1.1%. I'd obviously like to see that below 1%, but it's very close to below 1%, so it's not much of a major concern for me there. And stock level sitting at 0.2%, so supply is very low in this suburb, guys. So owner occupiers, very good. Median rents, very good. Vacancy rates stable, and stock levels are very good as well. Very low is what you want to see, particularly when you're investing in markets. Is low levels of supply and very high levels of demand. So for me, it's ticking a lot of those boxes so far. So we can see here that the median house price in Branyan has grown by 23.8% in the last 12 months. And it's basically come off the price point of $495,000 there. So in total, increasing by $155,000. So yeah, done some really good things over the last 12 months here, guys. And look, it's just been the trend, I suppose, with these top 5 suburbs in Bundaberg. They've all done some really, really good figures, and it would have been nice to invest in these suburbs 12 months ago, that's for sure. Making some really good coin here, but nonetheless, we can only look at the point in time data now, and see if there's still opportunity in this suburb. And just to speak to that point right now, the median house price sitting at $650,000. Look, I still think that median house price has a lot of wiggle room to push up. I think it can definitely get to 850 over the next sort of couple of years. But I'm saying that I think there are a lot of properties that are sort of under that median house price right now in Brandon that you could pick up that I think offers a lot of good value for money. I think they're the ones that I believe still have a lot of capital growth upside in them, because there's been a lot of transaction volume in Brandon, particularly the more expensive properties like the larger rural residential properties, the 1 or 2 acre properties. They tend to be the upper end of the market, and that has a tendency to also drag up that median house price. So I think a lot of that's been happening over the last sort of 6 to 12 months as well. And it's really pulled up that median house price, but I think there's still some really good buying opportunity in that sort of sub $600,000 market. I think that's where the best investment opportunities are, and I think this market can certainly rise to that sort of 850 over the next couple of years, because as you can see, it has these owner occupiers that find the suburb very desirable, very appealing. And Brandon's one of those areas as well. It appeals to a lot of the big farming families. So Bundaberg is a big farming town as well. So a lot of the farming families tend to be located on the north side, and obviously a lot of the farmland towards the north side of Bundaberg. They tend to live around there to have access to a lot of that sort of farmland and be close to where a lot of the work is and where a lot of their properties are. So you're either on the north side or you're not. That's generally the case when you live in Bundaberg, but Brandon's been a really beneficiary of that sort of north and east side divide, and it's been one of the suburbs that has really performed as a result of that. But I think this suburb has a lot of wiggle room to push forward. It does have some available land in and around there as well. I think there'll be some new supply in the pipeline as well, but I don't know the velocity of what that looks like. So if you are looking to invest there, just be mindful of some of that new supply and just have a look at what that pipeline of new stock will look like. If it's a lot of that sort of cookie cutter, 450 square meter, 422 brick homes where the roofs are almost touching, that's a lot of inferior stock that will be coming to the market, and that can really drag down that median and really create a lot of competition for the property that you might buy there for rents and for sale, etc. And that could be an issue all around. So I'd be keeping an eye on that. That's all, guys, if you are looking to buy in this suburb. Days on market looks very good, sitting at 37. So it's a very hot market as well, guys. Things are going under contract there within the first sort of 1 to 7 days. So you be quick if you are buying in this suburb. And you can see it's maintained this trend for the last 12 months. So a very hot suburb it has been for the last 12 months and hasn't really shown any signs of sort of demand slowing down for it to maintain that trend over the last 12 months. You can see here that the absorption rate is sitting at 67%. So it's had a total of 37 listings and 25 sales in the last 6 months. Look, probably not the absorption rate that's knocking my socks off, similar to what we've seen with the other suburbs. But what I've actually noticed with Brandon is a lot of the bigger sort of farmland properties that are coming to the market are taking a bit longer to sell also. And they're not being snapped up necessarily as fast as what a lot of these sort of standard residential properties are. And I think that could be really dragging down that sort of absorption rate also there as well. But I think a lot of that stuff that's selling well and truly below sort of 650, I think the market's really absorbing them nicely. But the stuff that's sort of above $1 million or more, and there tends to be a lot of that farming stock, is taking a little bit longer to sell. We can see here that the listing click rate on realestate.com is very high as well, at 920 unique views per listing. So look, all the demand side data is looking pretty healthy to me as well, and if that can maintain that sort of levels of health over the next 12 months, we might start to see similar growth rates in this suburb here of Brandon. But as I said, guys, I think it's definitely a suburb that can get to 850 over the next couple of years. Has a really good upper end of the market. I think they can pull up that median house price. I think the best value sits with a lot of the properties that are sub 650,000. If you can get in and buy one of those, I think that's where you're going to get some really good upside as well. And I'll speak to that on the next slide. All right. So as I said, the good value in the suburb, I think, sits below that 650 price point. And you can pick up something like this, which is a brick home. This is recently sold in June. So not a lot of these opportunities will come up, but if they do, I'd be jumping on them very quickly. So it's on Neville Drive in Brandon, number 40. It's a 422 on 620 square meters of land. As you can see, low set brick home, looks to be, quite nice aspect and street appeal as well. So I'd be targeting these ones, guys. And I think, if you can get your hands on one of these, I think that's where the best value in the suburb is. But if you look at the making of the suburb, it has sort of a really sort of upmarket area, bigger sort of rural residential properties that sell between sort of $1 million and $2 million. You've got sort of the middle end of the market where properties sell between sort of 700,000 to $1 million, and you've got sort of the lower end of the market where things sell between sort of 500 to $700,000 there. So I'd be definitely buying within the lower end of the market here, between sort of 500 and $700,000, and targeting properties just like this one. I think that's where the value is, because it's very hard to get these 4-bedroom, 2-bathroom properties slab on ground, brick homes built in the last sort of 20 years in Bundaberg still for under 550. So I think Branyan, the Beeben, suburbs like that, parts of Avoca, parts of Millbank is probably the only place you can get those sort of properties now anymore. Everywhere else it's virtually impossible to pick up sort of these brick homes like this one. So I'll be targeting ones like this, guys. Woo! All right, guys. Thank you for tuning in today. If you made it all the way to this last slide, yeah, appreciate it. Leave a comment in the comment section if you have any questions pertaining to any of the suburbs. Even if you want me to look at any alternative locations and do a similar video, leave a comment in the comment section. I'm happy to circle back and look at what you guys are keen on getting information about. But if you fall into any of these categories as well, feel free to reach out to me and the team. If you're a struggling home buyer, if you're a struggling investor, if you're an interstate buyer looking to buy in regional Queensland and you want to get access to off-market, pre-market opportunities and buy the best deals in town, feel free to book a call with me and my team. There's a number, there's our website, and we can go from there. My name is Troy Bassini, guys, and thank you, family, for tuning in today. Really appreciate it. Bye for now.